It is one of those scenarios where that precipitous fall that we've seen since the record highs for Meta has resulted in a market cap destruction that many investors are trying to handicap around whether or not it's possibly a bottom or if there's more downside to come. And the earnings last night kind of gave a little bit more food for thought. So remember, at the height that we saw here just within the last year, we are talking about a $1.1 trillion market valuation. And then today, closer to just around $435 billion in terms of market cap. So that move has been a huge catalyst for whether or not there is value in a beaten up name like this. If you take a look at the valuation perspective as to what you're paying right now for every dollar of next year's anticipated earnings per analyst estimates, at the height over the course of the 10 years, we are talking about a company that traded at 58 times next year's expected earnings. Right now, it's closer to around 14 times next year's earnings. And even during the depths of the pandemic, this was still a stock that was 16 times with a forward PE. So that gives you an idea of kind of how the valuations have compressed over the course of the last 10 years. If you look at the analyst commentary, it is interesting just to see some of the overnight commentary and the numbers that are coming out here. We're talking about a $233 average target price right now per fact set. That implies 48% potential upside. There are still 70% of analysts who cover this stock that say it's a buy rating, and maybe not a surprise there. If it's fallen so much right now, it still should be a buy, but it's been that way for a while. In the last year, in the last 2 years, it was as high as 88% buy, so very much a consensus still building around there. And as for some of the overnight commentary headlines-wise, to give you an idea of what analysts are looking at right now, Goldman Sachs team says macro headwinds replace privacy headwinds. That's one of their headlines there. Citi analysts say 3Q guidance highlights weakening advertising demand, something we're watching for many of these internet names. And then Evercore ISI says probably still a classic DHQ, in other words, a dislocated market cap kind of aside here, dislocated high-quality stock, a stock that should be high quality and has those characteristics, but has been trading at a deep discount. So, John, as we watch some of the analyst commentary, the investors out there are trying to figure out whether a 14 times forward PE in a dislocated high-quality stock is still one where they can say, hey, maybe this is a time to start nibbling, or if this is a falling knife scenario and you just don't want to catch it at this point, John.